Why? What changed?
The market itself went, small companies in Vermont started in the 80s doing intra, meaning Vermont-only state offerings, so that a Vermont company can offer stock, securities, to raise money for its operations to Vermonters. That's basically what an intrastate offering is. And if you do it that way, you avoid a lot of the larger, more complicated securities registration laws that the state and the U.S. Securities and Exchange require. And so going to market, going to the stock market can be very, very expensive, time-consuming, requires a lot of expertise, lawyers. So what an intrastate offering does, it allows, for us, Vermont companies, and in particular smaller companies, if they meet certain conditions, we allow them to avoid federal registration and more sort of complicated securities registration. It's like registration light. It doesn't mean that any of the consumer protections are gone. They're still intact. There still is anti-fraud provisions, and you've got to, not have any omissions or errors in the information you're telling potential stockholders, but that you don't have to go through the very, very deep, sophisticated, analytical kinds of regulatory hoops. You can, if you don't have audited financial statements, for example, we will accept those if certain other conditions apply and things like that. So over time, what happened with the old intrastate offering in our laws, up until the new regulation that took effect today, is that the level of money that you could raise was capped at $500,000. There was also some restrictions on how many Vermonters you could offer to. And those types of very tight restrictions no longer apply in this day and age. It takes a lot more money, small investment, and it takes a lot more money. $500,000 20 years ago was a lot of money. Now it's not enough really to help get a new venture off the ground. We're seeing $1 million to $2 million as being the kind of neighborhood of money that needs to be raised. Plus, when you think about it, maybe there were some artificial restraints on those in the old law, and we started thinking about why put the limit on the number of Vermonters you can go ask for funds. If you want to get funds from 10 people, 20 people, doesn't matter. What we thought we would do is instead put a limit on the amount each Vermonter could invest. So there's a $10,000 limit. Unless you're what we call a sophisticated investor, which means you have certain high net worth and you can certainly handle higher amounts of investments, and we will allow there to be as many accredited investors, sophisticated investors, to participate as they wish.
And can you just say for me, just clarify this concept of saying who can invest how much? That's not a new concept, right?
No. And in fact, the Vermont Small Business Offering Exemption is not a new concept at all. It's the intrastate Vermont-only way to raise money, small amounts of money, by Vermont companies from Vermonters. So we've had that law for the beginning of our securities laws. What's different now is that we have modernized the law to be more in sync with what the needs are in terms of the amounts of money that Vermonters can raise, and we've also streamlined the regulatory process so that you can actually get to market faster by going through almost like an expedited review with the Securities Division.
How fast is fast?
Couple of months. We want folks to come talk to us early. Come bring a business plan, talk to the division about what your thoughts are, how much money you think you need to raise, show us some pro forma financials, and then the division itself can help small businesses or their lawyers if they have them. They don't have to have a lawyer. This is very, very user-friendly in terms of understanding the process and the application, and we help Small companies do it. We have to make sure that we have all the types of information, the disclosure information, what the project is like, how much money is going to be raised, what's going to happen to the money. You have to be very clear about how you're going to use the money. You don't say, I'm going to build a structure, and then you go off and do something else. The proceeds have to match the offering. So we help small companies put together their prospectus. We read for not just plain language comprehension, but we want them to explain the project so that people can understand if they give money for an investment, what are they investing in? And what do they expect as a return? And is that return, is that promise of an investment, of a return, supported by the project itself, by the market, by the financials that the company is putting forward? What kind of market research have they done? So it's really giving Vermonters the best story that they can, so that Vermonters make a decision. Do they want to invest?
And so when you say that we want businesses to come to us early, do you mean early when they're thinking about starting this business, or early once they've started the business and want to grow?
Both. It depends where in the cycle they are in terms of raising funds. So if they really truly are a startup and they really haven't started operations or anything, and the money that they're looking for is to help create the company, then they should come in early when they're building the idea and putting the business plan. If they are a company that's been in existence for a while and it's now time to expand, and so they're looking for expansion capital, come with the documentation that shows what they've been doing for, maybe they've been in business for 2 years, 3 years, and they're ready to take the next step. Come to us with that kind of information and talk about expansion plans.
Now, you mentioned that the first company who's planning to register, so their prospectus is all already, you're saying that the department has already approved it and the paperwork's going to be signed tomorrow?
It's been signed tomorrow. It'll, because the reg is effective today, we're going to make their exemption effective tomorrow. They came to us last March. They had heard that this was in the works. And so what we did was we spent the last couple of months helping them get ready and get through the application process, holding it until the new regulation went into effect, because they want to raise $1 million. And the old regulation wouldn't have allowed that. It was capped at 500. So this company's Village Builders. They're in Walcott, which is Lamoille County. They were founded in 1993, and they offer construction-related services, things like general contracting, electrical installation, home installation, plumbing, heating, refrigeration services. And about half of their projects, they have indicated to us, are done locally in Lamoille County, and then the other half are spread through Vermont and northern New Hampshire. What they want to do is to raise $1 million to do the following projects. There are basically 4 projects that are part of the offering. The first is they want to rehabilitate a 5-unit multifamily house owned by them, Village Builders, in Hardwick. They want to exercise an option that's held by them, Village Builders, on a parcel of land in Walcott to build a single-family home. They then want to purchase construction materials in bulk for use in those real estate projects and for their general business use. So they want to buy equipment. And they also want to exercise an option held by the company on another parcel of land in Walcott to build another single-family home. They are offering shares at $500 each.
So did this require SEC approval?
No. It's
No.
exempt from the U.S. Securities and Exchange completely. It's not federal. It's just us. So what we did was there's an application process. We get the company through it. We make sure that all the disclosure documents and everything's all right. And so we basically approve the exemption.
No, but I'm talking about the, okay, so.
Oh, what are you talking about?
Yeah, okay, so you're not talking about the company itself. I'm talking about the regulation.
Yeah.
The regulation having been approved.
Well,
It's
it went.
approved by you.
If you want to take advantage of the regulation, you get approved by us. by the
Right.
Securities Division. We had to go through the administrative procedures process here in Vermont to create the regulation. It was basically amend the old regulation.
So basically, you had to go through LCAR.
Yeah. ICAR and then LCAR.
Which one's which one's
I is first, and that's intra-agency, so
Oh, okay.
it's a two-step process.
Okay.
So we first went through ICAR, and they said fine. Then we went through LCAR. Then we had to do the public hearing notice, and we had to have a public hearing. We took comments from industry. We've taken comments from small business. We have taken comments from legislators. We have talked among ourselves. We have, reviewed other states. We did quite a lot of background work on this. Then we spent time talking among ourselves about what we felt the market in Vermont really needed. And so we talked about whether there should be a $1 million cap or a $2 million cap, and I didn't want it to be too low, because I'd like this to be flexible enough for the next few years at least before changing it again. So what we did was we decided, if you are a company that does not have audited financial statements, you can raise $1 million. If you're a company that does have audited financial statements, you can raise $2 million. So that means that maybe what will happen over the next year or so, if you go for the $1 million because you're still small and have unaudited financial statements, that then you'll grow big enough and you will be able to come back for a second bite up to $2 million if you want, because you'll be big enough for audited. Or you'll find that investment, because it's very expensive to get audited financial statements. I mean, you're basically getting a CPA firm to go from the attic down to the basement and back up. That's an expensive proposition. But if you want to raise $2 million, we think that would be important information for that level of money.
Cool. So you started with ICAR, then you did public comment.
Then we
period.
went to LCAR, and we had 2 sessions with them. One was just the first session to introduce the reg and to explain why we wanted it and what we did. They had some questions about who would take advantage of this sort of thing, why did you decide on this amount of money or that amount of money. There were a couple of questions that they asked us to go back. I think one question they asked us to go back and consider, and maybe it had to do with the number of Vermonters or why we stopped at 10,000. There was a particular question they had. We turned around and went back with that question, and they said approved. And then it had to sit for 15 days. That's part of the deal with LCAR. You have to have a 15-day period before it actually goes into effect. And so that was the last 15 days. So today is, I think it was Friday, but today basically it is now an effective regulation.
And why did you stop at 10,000 per investor?
Some people might say it's arbitrary, but if you think about an individual in Vermont, $10,000 is a lot of money. I mean, it's a lot of money to me. I don't know if it's a lot of money to you. And we don't want people to be sinking more money than they should into, these are fairly high, risky investments. These are untried companies. It's wonderful that it's our neighbors and it's small businesses, and we want that to be good, but we want people to be prudent in the way that they invest. And so if you are a sophisticated or accredited investor with a lot of money, I mean, we're talking more than $1 million in net worth and that sort of thing, we're not going to put a limit on you. But if you are, middle income or, Vermonter who is thinking, gee, I could put $10,000 into this project, well, that's okay. We think that that's probably the top end of what people should risk. And maybe they shouldn't even go that high unless they really could lose $10,000 and not feel the pain. So, am I being paternalistic? Maybe a little bit. But that's also part of my job, is to protect consumers. And so we thought $10,000 was a really good number. Some states are much lower. Some states are a little higher. We thought that was a fair stop for an investment. And we'll see. We'll see if there's an appetite for that. We'll see what the average investment is. This particular first one, they're only going for, a price of $500 per share. I will be surprised to see what people kind of decide is their investment appetite. Maybe they'll say, okay, I'll give you $2,000 or $3,000. So it was a little bit of a arbitrary number.
But this first one, that's all they're offering. So that's what they have been approved to offer is $500 per share, and that's all they can offer is $500 per share.
Per share, but you can buy up to $10,000 worth of shares. Because remember, they want to raise $1 million. We have another company that's given a call. I can't tell you the name of it yet. That is confidential. They have not formally applied. But I'll tell you, they're a small food company. And, they don't want to raise $1 million. They just want to raise maybe $50,000 or $100,000. And so their idea is going to look very different. They're going to be at a much lower range of what they want to do in terms of it's a small company giving up some ownership. And maybe they'll wind up, at $10 a share or $100 a share. And if you remember, I think the intrastate offering for Ben & Jerry's was, I think there was a cap at $100 per Vermonter back when the first intrastate offering. Don't quote me on it. This is a long time ago. And I remember, I was part of that there was a situation where they allowed Vermonters to buy $100 worth of stock before the rest of the market was allowed to. It was the special Vermont intrastate offering. And I don't know if I don't think it was one share. It was maybe it was $1 a share back then. I don't know what it was. But there were some limits.
That's interesting. So let's see, a couple more questions. This one is just logistical. When you talk about the sophisticated or accredited investors, does the state have its own process for accrediting investors, or is that people who are accredited through the SEC?
Well, it's just a demonstration of meeting a definition of sophisticated or accredited. It's not like it's not like you have to submit you personally your information to me and I say you are now accredited. It's just that you could show through your tax returns and your net worth to the company that's offering securities, so to Village Builders. You can go to them and say, here, I can prove to you I'm accredited by the SEC's definition, and in fact, in Vermont, we also have some definitions too, but we rely on the SEC. And so they can show you that I really have the net worth, that I meet the definition of accredited.
Okay, and so it's the company who they submit to?
Yeah, it's not us. It's
Okay.
not us. But if we were to decide we had to investigate the company because we've heard a complaint that there's something going awry for this offering, or we would of course ask them to show us that every single one of their accredited investors in fact proved to them, and they sort of documented it, and we would ask them to prove that each one is a Vermont investor and that they did not go over the limits, because they would lose the exemption if they violated any of the terms of the exemption. It could scotch the deal. They might have to give all their money back. It would have real consequences to the ability to keep and maintain the capital, and it might mean we shut down the whole thing and create an enforcement action.
So will it just be sort of any type of investigation or auditing as needed, or is there a built-in plan to audit participants?
We're going to ask for some ongoing documentation that the project is going as planned. I think that's prudent. I don't know if we may do something when we ask for some quarterly reports, just to make sure that they're raising what they say they're raising, and they have to tell us when they've met their thresholds and when they consider the offering to be done, and that they have the capital, and they have to do it. They have a year to do it. So there are some deadlines for which they've got to raise capital, and we want to make sure that they meet them.
Oh, okay. So they have 1 year to do it. Okay. And that's so I'm not sure. I'm not sure I can speak. Spit it out. So are you thinking about asking them for quarterly documentation, quarterly reports, or are you asking them?
We are asking them for quarterly reports. However, the reason why I'm hesitating is that, each project is very different. It has its own personality. There may be a need for some to be more. We may want more documentation at certain times, and others we might not need as much because they're a much more mature project. So I'm kind of leaving it as a little flexible here in the way I'm describing it.
Cool. Okay, thank you. And then how about reporting on the program? Evaluate how well did we design this program? How well is it working? What is the impact?
Well, the way that we're going to do that is, first of all, it would be interesting to see, number one, how many Vermont companies take advantage of this. And part of our job is to get the word out. So we are going to be doing some educational sessions throughout the summer around the state with the bar associations and some of the small business organizations. We're going to start going around and just talking about it so that people know it's an option. Over the past 20 years or so on the old regulation, I think we had maybe 14 exemptions in 20 years on the old one. It was never used because it was so old, in the sense that it wasn't flexible enough. It didn't allow them to raise enough money. It was not a useful regulation. So I want to see if there's, one way is to see whether or not we start to have an interest in going this route. So that'll be one thing, to just see if there is a real need for this. I mean, I can come up with the best ideas on the face of the earth, but unless there's a real need, that'll be data for me, won't it? I mean, if it's only this poor guy and nobody else, well, then maybe it wasn't the thing that I thought was going to help. So maybe this, for the rest of this year, if we had a handful, that would be fantastic. That would be phenomenal. I would say, if we wound up seeing that there was an appetite, I'm not going to put numbers, but an ongoing interest in this, that'll be one. The other will be to see eventually whether or not we get lucky in a lot of this and we've got successful companies that get launched. I mean, many companies don't make it after startup and even in expansion. And so if in 5 years we've got some companies that have moved into being viable, contributors to the Vermont economy, that's a success rate, and we'll follow the companies to track that. I know in the old regulation, there were several companies that in fact moved on and were very successful, and there were a bunch of them that tanked. They went out of business, or they didn't succeed, or they decided not to continue, which you have to imagine that's going to happen.
Was there anything that was on your wish list that you didn't get out of the regulation?
No, because we created the regulation. So one of the nice things about regulations is that you can sit down and pretty much come up with what you want, and as long as it's reasonable and is supported by our documentation and our experience is that LCAR is very supportive, and I think that they saw, just as House Commerce and Senator Ralston and all those folks last session saw that we need to do some things to help small businesses gain access to capital and credit. Now, if it had been a statute, maybe there would have been more give or take or negotiation. I don't know. That's the nature of statute and legislature. But we got feedback from the legislature on some of the legislators on this, and when I explained to them that. A lot of them wanted us to allow New Hampshire folks across the border. They're like, don't keep other people out. Don't keep New York out. Don't keep, there are people in New York that might want to invest in projects. And I said, yeah, but the problem is that destroys the exemption. And then you've basically invited the SEC to come on in, and then you're talking securities regulation with capital S, capital R. And I said, so I get it, and I would love us to be able to do something like this, but there are other types of exemptions for those extra state, multi-state things. This is a very special carve-out, very special. People, talk a lot about recently is the crowdfunding idea. This is not crowdfunding. We are in the process of doing a crowdfunding study this summer. The SEC issued, I kid you not, a 450-page regulation on crowdfunding. I've yet to get through the whole thing. And they're going to give some guidance, and so we're waiting for that. I believe that, we might see a need for some crowdfunding regulation, either through law or regulatorily next year. Probably we have to start with some kind of statute if we're going to regulate it. A lot of states have already tried to get ahead of the curve and put in statutes. I resisted that because I thought it was premature. I did not want to create a law or a regulation for something somewhat theoretical. I want there to be a little bit more of a track record about the need for crowdfunding and how would we shape that in Vermont?
A need for crowdfunding or a need for crowdfunding regulation?
Both.
Isn't the need for crowdfunding sort of self-evident by the amount of it, by the volume?
Well, I don't know how much of it is, this is kind of a neat, cool thing, and so I'd like to do it, and what the heck, it's only $50, versus are there other ways for small companies to raise capital? And the issue of, now we're talking about something that's so completely beyond the borders of Vermont, if you think about it. You go on the internet, and you go on a website, and you can be anywhere. That's the sort of pure crowdfunding. And if somebody likes your project, they'll kick some money towards you. That's basically going to Vegas, right? That's going to Vegas. And so, again, not to be too paternalistic, because I believe in innovation. I think it's kind of cool. But I just want to make sure that consumers are protected. Where's the recourse? If you've got a project somewhere else that you can't kick the tires, what should be the rules for that? Versus knowing that, you can drive up to Lamoille County and see Village Builders and go meet Fred Martin and say, show me this before I give my money, if you really want to do that. So I think that it's going to be an interesting conversation. It's one I want to have, and so that's why we're doing some research on it. And we'll see next session whether or not that's part of our legislative package.
I'd love to cover that. What's the schedule like for that crowdfunding study? There's a study due it's sometime, right?
That study's due January 15th.
And so is there another study that you're talking about?
Oh, I got so many studies. The legislature left us a lot of little presents. Yeah, the study that's coming out, the first study that's coming out July 15th, I'll be happy to send it to you, is the one about surplus, health insurance surplus, who owns, and what happens to health insurance companies' surplus, that's their savings account, in the event that the company ceases to operate.
Ceases to operate in general or ceases to operate in Vermont?
In general.
In general?
Yeah, what if a company stops
But what if they
business of insurance?
What if they stop the business of insurance in Vermont?
Well, since we only have two companies, health insurer companies, and one is a Vermont company, the Big Blue, Cross Blue Shield, if they stopped in Vermont, we'd be without health insurance. Now, that's okay if you're moving towards single payer and that's where you expect to go. But the question that the legislature put to us was, in the event that happens, there's surplus, there's extra money that's regulatorily required. What happens to that money? And so the answer is not easy, and they asked us to put together a report for them, and we're going to submit that in mid-July.
Cool. I'll let Morgan know about that, because I heard a little bit about that and talked to a couple people about
what happens.
How that surplus might come in handy.
Yeah, I know, but I think people have to understand that, just because there's theoretically $135 million sitting up on the hill, there really isn't $135 million if you were to start to unwind an insurance company. You might, in fact, be surprised at how little there would be left, because you got to unwind the company. You got to pay all the claims. You got to keep claims open for a while. there might be maybe half that. And then what if the company decides it wants to become a different kind of company? Maybe it knows it's not going to be able to sell major medical anymore. But what if it wanted to enter the supplemental market? Wouldn't it have the ability to keep some of its surplus? So I think it's a very complicated and actually very creative question. So we're doing our best to put our thinking caps on and come up with a lot of scenarios and try to explain not only the law, because the law is kind of pesky in there, and the Attorney General is going to read the report, and I guess they have to do an opinion or something. They have to give us an idea of whether or not there are any legal issues that we haven't picked up.
Does that AG's opinion come after July 15th or before?
It comes with it because it's going to be attached to our report. Because the law that the legislature did to create this study said that they wanted us to be in consultation with the AG. So that's a study. There's also another study about licensed lenders that'll be about next January. Again, it's part of the access to money conversation. This is whether or not the licensed lender laws in Vermont, the credit, access to credit laws, not banks, but licensed lenders, whether they are too strict or could be more flexible or modernized in some way to, I don't know, create more access to credit. I don't have an answer to that one yet, because I think that we touched the licensed lenders laws a couple of years ago to make them a little bit more flexible. We also did a de minimis exemption this past session, whereas if you give 3 commercial license lending leases, or that you don't have to get a license. So I'm not sure what that's going to look like, but we got to take a look at that one.
And then just going back to the crowdfunding, so that report will be due in January, but what's your schedule like for working on the report in the meantime?
Well, first we got to get the surplus lines, the health insurance surplus one out of the way. So we're not even looking at that one until really after July. I've got a couple of lawyers that are going to start pulling apart that issue. And, I think what we're going to do is probably invite some small businesses to comment. We're going to, talk to some of the lawyers in the state that do investment projects. I'd like to get a sense of what people are thinking about this. Is it something that people really think will be useful? And so we don't want unintended consequences. What are the pros? What are the cons? And I think it'll lead us to, and then I want to know what the SEC thinks about it, because they may preempt some of this regulation. It might lead us to saying that, yeah, we want this to be an option in Vermont. And then maybe what we'll do is propose some legislation or talk to House Commerce or Senate Finance or some of the folks, and also see if it's something that fits in with the governor's legislative package.
I'm trying to even imagine how the state could possibly regulate crowdfunding within.
Well, some people think the SEC is in a better position to regulate it. That could be true. A lot of states prefer to regulate securities within their own borders. So I know a lot of states have some pending. A couple of weeks ago, another state passed something. I think there may be about 15 states that have passed some kind of crowdfunding or have something pending. So I don't know. I think we have to take a look at it. I don't want to waste everybody's time, including our own, if it's going to be preempted, or if the SEC feels that they want to do something that will then mean that we'll have a lesser role. I mean, clearly, they never take away our ability to do consumer protection, the investor protection. They cannot. They can't take our anti-fraud provisions. They cannot usurp that. They always leave that to the states because they know that we're the ones on the ground. So we're going to get the person coming in off the street and saying, wait a minute, I've just been ripped off. They're not going to go to the SEC. So enforcement always lies within the state regulators. That's no matter what. No matter what kind of fancy programs the SEC has, you know, we always wind up with investor education and enforcement at the state level. So.
Okay, cool. I always learn so much when I talk to you.
Ah, that's fun.
Thanks for your
I'm glad
time.
you're willing to spend time doing it.
Oh, it's really interesting to learn about, and it's just because like I said, I mean, that's what I keep hearing a lot about is access to capital, and so
Yep.
then it's interesting to see the different shapes that it takes to the different shapes that the efforts